Hey, welcome to the Mortgage Minute for February 28th. Tomorrow's leap day, February 29th. Very interesting little differences between U.S. and Canada right now in the headlines. Here's one from yesterday saying Bernanke will cautiously talk up the market. He's warning Americans that basically the housing market is still soft and we need to keep moving forward and trudging along and to kind of keep the housing market humming along there. Now, while he's trying to talk up the marketplace, in Canada we got the exact opposite. Central banks target home equity loans. Again, the Bank of Canada, Mark Carney, is worried that we're spending too much money using our houses as ATMs. There's a huge concern in Canada that we're getting overladen in debt on home equity, and when the rates rise, boy, there's going to be trouble. In fact, some of the comments we've heard, and I'm going to go off the internet on these. I'm going to read these off. It's just amazing. I put together a few. One, are we in a housing bubble? The housing market is poised for severe correction. That was from a finance professor on Bloomberg News yesterday. Another one, Canada may be on the cusp of a severe housing correction. Families are vulnerable to significant shock if prices were to snap back, according to the Bank of Canada, as central banks again target home equity loans. Mark Carney says Bank of Canada warns of a possible housing correction. Seeing a theme here? Bank of Canada warns of possible debt shock because of too much dependence on the lines of credit. This is interesting. Then you have Jim Flaherty across the street there saying Ottawa is poised to tighten mortgage rules again. I think it's 10 out of 14 economists surveyed said Ottawa is poised to tighten mortgage rules. Jim Flaherty came out and here's a quote. He said, "It isn't necessary that everyone has the most expensive house possible. Is people have to be wise and know that interest rates have nowhere to go but up." That's a quote from Jim Flaherty. So again, we're looking at, Ottawa leans on banks to tighten mortgage lending guidelines. So again, we're seeing this on the United States. You got Ben Bernanke, the central bank governor of the Fed, talking up the market. In Canada, you got our central banker and the head of the finance department, Jim Flaherty, talking down the market. The reason is Canada and the central bank in Ottawa know there's very little they can do. They can't raise rates. So when they can't raise rates, they'll tinker with CMHC insured mortgages, which again doesn't mean all mortgages, it just means those insured by CMHC. That's all Jim Flaherty can tinker with. And the other side is Mark Carney really has his hands tied. We know he cannot raise rates. Rates are going to be steady and consistent. He's not going to deviate too far from the United States, and they've already said they're not going to change rates until 2014. So when you can't change rates, you talk down the market. So look for this. The unintended consequence is it will actually be a jump start to a spring market. Yet again, we've seen this 3-4 years in a row now. The oncoming threat of mortgage rules and changes in March, which will take effect in April, will result in a surge in home purchase activity, mortgage activity in March. People are going to try to get in while they can before the rules change. I will keep you posted on that in future Mortgage Minutes, so stay tuned here and follow the website at peterkinch.com. That's the Mortgage Minute for February 28th. Have a great day.